folks, Dan Frio here with your market update for March 4th, 2024. So if you're a realtor out there or you're a consumer out there, you're looking to buy your first house, this is for you, okay? What my goal on this channel is to educate you guys what the heck's going on with housing affordability. Well, I don't really know what's going on with house prices in your area, but what I can help you focus in on is what kind of mortgage program you can qualify for and what kind of mortgage rates you can get. So in today's video, we're gonna go over where rates are right now, what data's coming in this week, and where rates I think will end up at the end of this week. So let's get over to it. What you're seeing right here, these are the top 6 products people use when they're buying their first house. These aren't my rates. These aren't any real individual banks' rates. What happens is Mortgage News Daily, right up through there, they survey lenders all over the country and they ask them this 5 questions. The 5 questions are, if you had somebody buying their first house, it was a single family home and they were gonna live there, that would be your rate. No, that wouldn't be your rate. There's 2 more pieces of this puzzle. These people have a 780 credit score and they're putting down 25%. So you're probably saying, Dan, I don't have a 780 credit score and I don't have enough to put down 25%. Well, that's okay, because our average borrower has about a 620 credit score and they're putting down 3%. So I'll give you all my information at the end of this video. So if you're looking to buy your first house, reach out to us. If you're looking to buy your first investment property, maybe looking to do a cash out, I'll give you my information at the end of this video. So without further ado, let's get over to it. You're going to see rates took a little bit of a reprieve last week. It was nothing but in the inflation numbers last week. This week, what we have on the agenda is jobs, jobs, jobs. That's the other piece of the equation that the Federal Reserve monitors. So if we go down through here, here's what you're going to see. There's really no economic news today. Tomorrow is going to be servicing and manufactured numbers. Those are going to play a big role in here, but here's where the data starts coming in. On Wednesday, we have ADP employment numbers. This will be a market mover. Then we have Federal Chairman Powell coming out and speaking. He's going to give a testimony. Every time he comes out and talks, or any one of the federal officials come out and talk, it does move the market. So be patient for Wednesday. What's going to happen? I'll give you a little bit of context here once we go through this agenda. So the next report we have out on Wednesday is the JOLTS index. What that is how many job openings. So meaning the more job openings there are, might not be that good for our equation, because that means employers need employees. And if there's a huge amount of job openings, that means employees might demand higher wages, and that's going to push up inflation. So we're going to review that number meticulously. And then on Thursday, we have initial jobless claims coming from the government. This first one up here was ADP. We're going to look at that. Federal Chairman Powell speaks once again. Then on Friday, we have average hourly earnings, non-farm payroll, and the unemployment rate. So it's going to be a big week. Here's what I'm anticipating. I'm anticipating the job market not being as robust, but not crashing. So we're basically going to tread water here. Federal Chairman Powell's going to come out and he's going to answer a lot of questions. I think it's going to relieve the market this week because we're starting to see the data having consistency, or the consistency that the Federal Reserve wants. We had Goldsby, he's a member of the Federal Reserve. He came out on Friday and he said, guys, inflation's ticking right in line on what we're looking to do. And he's expecting 3 to 4 rate cuts this year. So when those are going to be, don't know. But as soon as we know for sure, I'll let you know. Okay. So we'll go over to here, the jobs report. You can see if you just look at the top stories on Wall Street, what are you getting? Basically jobs, 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 and Federal Chairman Powell. So the Federal Reserve has a lot of power right now. And what they're controlling is basically interest rates and the markets, stock market, cryptocurrencies, and everything in general. What we want to do is focus in on the jobs numbers. So here's where I'm a little bit at odds with the Federal Reserve. Okay, the Federal Reserve is saying, there's a lot of there's a robust amount of jobs coming to the market. So there's a lot of people working. If you just basically go to the jobs report over the last, let's say 20 years, here's where the numbers are. Here's where the real numbers are. You can see right through here. If you go back to like 2008 or the crash. Well, let's go back all the way to 2004. 62.3%. Okay, we're just going to follow these numbers. These are how many people are working. You had it drop off in 2008. Remember that, the big recession? And then you go over to the crash, basically a COVID crash right through here. But if you see this, the jobs numbers were steadily moving up and up and up. So if you basically push this number out over here, our jobs numbers should be basically up through here. So we don't have a huge amount of jobs that came back to the market. We're not even where we were pre-pandemic. So the jobs numbers for me, they're not as, I think it's a way for the Federal Reserve to say, okay, we're going to meticulously watch this, and if more and more people get jobs, that's bad for the economy. But guys, we aren't even back where we were pre-pandemic. So please be careful for that. So let's go over to the bond market so I can kind of explain this stuff to you. So what I see on my screens every day is this, okay? It tells me what the MBS market is doing right here, and it tells me what the treasuries are doing. There's kind of there's a gist here that I want you guys to understand. The MBS market, this number right here, this bond, it says MBS. It's a mortgage-backed security that trades on Wall Street. It's a bond, okay? That's all you need to know. Here's the price of the bond and what's going on right now. How bonds work is this. This is the price of the bond. As the price in this situation goes down, that means rates are going up. We don't want that. But we also watch here is the 10-year Treasury. 10-year Treasury, we don't want this number to get to 4.31. 4.31. That's a trigger level on Wall Street and all over the country, all the markets that says if this gets to 4.31, you're going to start seeing a major weakness in the mortgage-backed securities market as well as the stock market. So these are a lot of things you're going to learn on a daily basis by following me on my channel. So what do I do? Who am I? Well, basically, I'm a federally licensed mortgage advisor. I'm licensed in all 50 states as well as Puerto Rico, and I would love to help you navigate this environment. So if you're looking to buy maybe your first house, maybe your first investment property, maybe you're even looking to refinance because you closed 3, 4, 5 months ago and the rate was 8%, and now you're seeing rates down in the maybe 7%. So you might even be looking to refinance at that time. How do you find us? We'll go to the rateupdate.com, and here's our website. Okay, what you're going to do is there's 3 ways to reach out to us for help. One is hit the apply now button. Then it's going to send you out for the online application situation. And you can also ask us questions there and set up a consultation with us. But if you're out there and you're like, Dan, can I call in? Can I email you guys? Absolutely. What you're going to do is you're going to scroll down to the bottom of our website right through here, and you're going to see those 2 things. You can give us a call at 844-775-LOAN. That's 844-775-5626, or you can email me directly at dan@therateupdate.com. So thanks so much for watching, guys. God bless. Have a fantastic day, and if you need any help navigating your first home purchase, we'd love to hear from you. So take care. Have a good day. Bye-bye.